Hello, I'm Jessica Amir for the Finance News Network. Today I'm with Flinders Investment Partners co-founder and portfolio manager Richard Macdougall. Hello Richard, good to see you again.
Good to see you, Jess.
So for those who haven't heard of Flinders Investment Partners, just give us an introduction.
Flinders is a single focus, one product, emerging companies fund. So that is a fund that invests outside the top 100 ASX shares. It's a very risk-oriented portfolio. It's a portfolio that of companies that makes money and are growing, and that's our focus. We have generally about 40 stocks in the portfolio, and we look at it as an ideal investment for someone that wants exposure to small caps, such as a self-managed super fund or someone else's part of a growth portfolio.
So Richard, why do you have the house view and a strategic focus on emerging companies, and what makes them so attractive?
Small companies don't want to stay small forever. They want to grow. So we focus on growth and the management's ability to help that growth. Companies enter the ASX usually because they're raising capital, and ultimately that's often because they want to grow. So we look at companies that can do that, a management team that's good enough to execute on that, and then the last thing we look for is an attractive price. One of the fundamental parts of our process is actually meeting with the companies and understanding the management, how they're running their companies, and then ultimately doing our own financial modelling and valuing those companies. Because if you've got a valuation and a share price, that's the gap we want to exploit, and that creates the returns to our shareholders and our investors.
So now let's dive into the fund in a little more detail. Richard, how is the fund composed?
We tend not to have too many biases, but at the moment, if you're asking about some areas that we're exposed to, tourism is one area that we have a number of stocks, such as Webjet, corporate travel and Sealink, but also industrial services. So Seven Group, which owns the Caterpillar franchises, and also the Coates Hire business, and NRW, which is a large contractor to the infrastructure and resources sector. With the tourism sector, it benefits from the lower Australian dollar. We've seen an uptick in inbound tourism over the last couple of months after a pause for the previous 6 months. So we think that's a good sector to be exposed to. And as for industrial services, with infrastructure spend, mining volumes are increasing quite significantly. We think that's a good position for these companies to actually grow with that expenditure and make good returns.
And Richard, just as a reminder, how do you manage the fund?
The fund itself, we generally have between 38 and 43 stocks in the portfolio. So at the moment we have 39 stocks in the portfolio. We never have more than 5% of the fund in one stock. We don't actually hold much cash. It's more for just buying a stock or selling a stock. So our maximum cash position is 10%. So we're generally fully invested in the small cap portfolio.
And tell us about its performance.
Performance has been strong over the last 3 years. We've only been going for 3.5 years, but we've averaged close to 14% per annum over the last 3 years after fees. The last 12 months has been slower. It's only around 4%, but both those figures are ahead of the index.
And Richard, what's your outlook in the small and emerging cap space?
Well, we actually think the economy won't be in bad shape in the second half of this year. That might be a minority view. But we think that the banks will start to be more open with their lending. Financing will become easier for small companies. That'll make a very large difference. So we think there's opportunities for these companies to grow. The valuations aren't expensive, and we think there are some terrific opportunities to be had over the next 6 to 12 months.
And just lastly, Richard, before we let you go, is there anything that you'd like to leave with investors today?
Yes, I think the message we'd like to leave is that small companies is an obvious place to be over the next 12 to 24 months, mainly because there is so little growth available in the large companies at the moment. It's small companies where people can access that growth. So that is a focus for us. We don't think that the market is that expensive in parts of small caps. So we think there are still terrific opportunities for our investors.
Richard Macdougall from Flinders Investment Partners, thank you so much.
Thanks, Jess.